Hello investors and traders, and welcome to the next Quick Chart Tuesday, which this week we're featuring Bitcoin futures, ticker symbol BTC. As you can see from this daily candle chart, we closed today with a bearish harami. A bearish harami results in lower prices about 80% of the time after the candle shows up, and it's very similar and closely related to bearish engulfing candles, which you could see back here. We had a bearish engulfing candle that resulted in lower prices, another bearish engulfing candle, lower prices. And so with that bearish engulfing, I am expecting the price of Bitcoin to drop. I do have a downside target that we put out to our members on our Rapid Fire Wednesday, and that downside price is 86,600. If you recall, I did put out a chart of the week published on ZeroHedge on November 25th, where I pointed out this cup and handle pattern that had formed on the monthly chart. And I had this big green candle here highlighted as the breakout, stating, as you can see here in my notes, that we could lead to higher levels, but the sell-off would be brutal for those who don't protect profits. And what are we seeing here? Well, if I go to the monthly chart, I'm using a different platform. This is a Thinkorswim platform. You could see that we are showing a shooting star on the monthly. Again, this is the cup right here. Here's the brim of the cup, and here's the handle of the cup. So we did break out last month. And what we're seeing right now is that candle right here, which is known as a shooting star. That is a small body candle, has a longer shadow on top. That's 1.5 to 2 times the length of the body. We saw a shooting star back there that also doubled as a bearish harami. And so this all gives more evidence that points to the downside. If you follow my trading checklist, if you're a regular follower of StickyTrades, what I do is I weigh the buy and sell signals and I stack them up. So you have a shooting star, that candle is bearish. We have the drop in volume on the way up, that is bearish. Now keep in mind we're approaching the second week of December, but we're not even a third of the way on the volume, so I'm already counting that as a bearish signal. So the drop in volume on the way up tells us the buyers are slowing down. You could see this wide divergence from the 20-period moving average. That too is bearish. We have the stochastic here overbought. The CCI is overbought. Both those are overbought. But as I mentioned in the monthly chart from when I pointed out that original cup and handle, we have a negative divergence here on the CCI. That's when the highs on the CCI are dropping while we continue to see higher price highs in the price action. So that is extremely bearish. So my downside target, again, 86,600 is still in place. That will bring us very close to this role reversal right here. Most of the time when you get breakouts, the price generally pulls back to the breakout point before any pivots to the upside occur. So that is the quick chart of the week. Hopefully you're enjoying this. If you'd like to have me analyze your stock, I'm looking for stocks that are overextended to the upside or even overextended to the downside. Right now with the markets being more overbought, I'm leaning towards the overbought conditions here. But I would love it if any of you have a good stock that I can highlight on the technical charts. I'll even give you a shout out. So thanks again. Have a good rest of the week, and I'll talk to you on the next video. So long.